Good morning, good afternoon, and welcome back. Zoya, podcast producer here. Now, you may have just come back from holidays, or maybe you're fitting in a sneaky early autumn break. Whatever it is, I'm sure you're aware of how annoying it is to have delays to your flights, which sometimes means you can lose a few hours off your holiday. But what happens if you're a business and you're sending perishable goods like prawns? Or your container can't dock because the bridge has been smashed up. And of course, we all remember what happened with the Suez Canal blockage. Matthew joins with Yann Barbarroux as he explains how Otonomi covers these risks when no one is to blame and traditional insurance isn't available. Now, while Yann didn't have a career in insurance, and we've seen many people who have had a career in insurance has helped them build a new business, for Yann, it was his background in financial risk management that gave him a fresh perspective to solve one of the world's insurance gaps through parametric insurance. Well, if you're not already familiar with Instech or not aware that we do have a life beyond the podcast, take a look at instech.co to find out what we know and how we can help you find your next business partner, whether that's an insurer looking for your analytical solution, or if you're one of those insurers and you're trying to figure out who can help you move your business forward. You're going to find many of those on the website and listen to the short stories about what people are doing and want to share with the world. That's pretty much it. Now let's see what Yann has to say.
Yann, it's great to have you back on the podcast. We first met on a panel in 2020, and if I recall what you said in the last podcast, that was part of your motivation to go and build your business. So it's really been fascinating to see how you've grown since then. I was also really pleased to hear that you had managed to take some time off. I know you're a big tennis enthusiast. You've been on a tennis camp. It's always good to know that founders, entrepreneurs, CEOs don't spend their entire life at work, but I'm sure you didn't totally switch off in that time.
Yes, the last 2 weeks of August have become a little bit of a ritual, I think, globally, that people are kind of slowing down. So I am essentially following suit's family in southern France, and I treated myself with 5 days tennis camp, and it was 6 hours tennis and workout every day. So it was a pleasure, getting into physical activity and shutting off a little bit from the work conversation. And the week after, I spent some time with my family, by the beach, the pool, and just eating barbecue. So it was all good.
I'm really pleased to hear that despite 20 years in New York, you still managed to retain some of that important French, European recognition that you take time off, even though it sounds like your time off was actually pretty exhausting by normal standards. So let's crack on. A little bit about Otonomi for those that don't know you, and then we're going to get an update of what's happening in the last year. So you're offering parametric insurance for the marine and the cargo industry, including things like cover for shipment delays. You were founded in 2020. You've been through the Lloyd's Lab, and you raised just over $3 million in seed funding last year. You're co-founder and CEO. And we last had you on the podcast in July last year, episode 255. So welcome back. You made a great comment, actually, when we were talking before about every year is like starting a new company. So we've got a lot to catch up on in 12 months.
Yeah, absolutely. And I've been coming to your events in London a few times during my Lloyd's Lab experience in 2022. It's been always a pleasure to seeing how much you guys grew as well. And I mean, it's kind of a reflection of the fact that the insurtech, the insurance technology sector has been dragging more and more interest over the years.
We had an event last night here in London with Google, and we're seeing more and more insurance companies turn up. And I think what's happening is at the most senior level, people are saying to their teams, you've got to go out now and really understand what's happening. And we'll talk a bit about parametric insurance, but it seems like that's got a bit more established. But I definitely recommend that earlier podcast. So just for those who haven't heard it, and just quickly to frame what you're offering, what problem are you solving for people that couldn't previously get insurance?
The starting point of our interest in the industry was essentially like pointing out to a very acute pain point in the maritime and freight in global trades, which is cargo delay and supply chain disruptions, right? So in the light bulb moment, as I was alluding last time we talked, was the Suez Canal blockage with this like traumatic image of in the headlines where people were saying like this cargo ship being stuck for days and days. Tens of billions of dollars were at risk in terms of loss of business, loss of income, penalties, destruction of cargo, the whole shebang. And what we found out is delay as a peril was completely excluded from traditional marine policies, right? And so that got us interested in the space, right? So we were already like prototyping and working on developing parametric, claims and automation based on event triggering mechanism. And we decided that logistics supply chain business was actually a perfect fit for us. Otonomi is dedicated in essentially resolving cargo delay. We thought that one of the best ways to achieve coverage and a risk solution for it was to bring the conversation around something very transparent, very fast, and very effective for the customer. And we opted to develop parametric products along those verticals. So instead of like going after maybe a named peril, like a hurricane, natural disasters, weather and climate risk, the only parameter that we focus on is the transit time delay. So as soon as that we have information from the customers about certain shipments, whether it's the master bill of lading, container ID, airway bills, or flight number in air cargo or whatnot, then we actually plug into our logistic visibility API. We track the shipments. Obviously, the policy has an ETA, estimated time of arrival. When the ETA and the ATA are essentially exceeding a certain threshold, so let's say in maritime would be 6 days beyond the ETA, then we pay out, right? It's that simple because we don't want to get into a situation where we want to understand whether it was caused by an external event, whether there was certain financial losses that are covered or excluded. If you essentially purchase $250,000 US parametric limit for 6 days or whatever, how many days threshold for our maritime delay insurance, then you'll get the full limit. And that's it. We wanted to make it a product that's very useful, very transparent, and also help the companies managing their cash flows and their liquidity, which is a major concern for a lot of the freight forwarders, the logistics companies, and the shippers, which are essentially being squeezed right now. Trade credits, financings of inventory and whatnot are a major concern. If we can alleviate those financial risks by bringing back the money and the capital in their bank account, is actually the biggest win that we can hope for.
You explained ETA. Most people are probably familiar with that acronym anyway, expected time of arrival. ATA, actual time of arrival. So you're saying if the actual time of arrival is 6 days after the estimate, that's within the tolerance, but after that, you pay out.
Correct.
You mentioned the Evergreen and the Suez example, but of course, you had some other major incidents since we last spoke. So we had the Baltimore port being impacted by the ship bashing into the Francis Scott Key Bridge in March. What else have you seen in that last 12 months? And how does that play into what you're offering and maybe some practical examples of where the payouts have actually happened?
Baltimore is actually a great example to look at where we can help out. At that point, we didn't have the product launch, so we didn't suffer, let's say, millions of dollars of claims, but it's a good use case for us to exemplify and illustrate what kind of risks are being mitigated. The major one in this case is rerouting. When you think about the fleet of cargo ship and cargo vessels approaching Baltimore, already in transit, there's been a small proportion of them that were at the port and essentially stuck in this area where the critical event happened. But I think it was something to the tune of 90% of the rest of the fleet was essentially approaching the US and the East Coast. And they got rerouted to New York. They got rerouted to Philly and Savannah and other ports that are essentially surrounding Baltimore. And they suffered delay because of it. So the mere rerouting of shipping lane incur delays. So what do you do in this case? Because now you get to essentially re-anchor your transit time to like a new port. You get to essentially work out the operations at the port, then the trucking, the ground transport that's subsequent to it, because now you get to reroute even your cargo to a different destination. This is extra cost. This is potential penalties and other financial losses that are attached with the rerouting. And with our product, is very clear cut. So because we monitor all those cargo shipments, now essentially suffering days and days of delays because of the Baltimore event, very glad to actually wire the money because we understand that everybody suffered in this event. So it's not necessarily what we would be covering. It's not destruction of physical property, but all the non-damage business interruption risks and all the financial penalties that are attached to rerouting and maritime delay would have been covered in this case. But to your next question, is that isolated events? Unfortunately, no. There's no one day, 1 week that when you don't open your LinkedIn or your news coverage when you don't find out about some sort of maritime risk and other critical events that are happening. So the last one was a few days ago in India. Natural disasters that created a huge amount of congestion and cargo delays. This is, quite frankly, completely outside of anybody's fault, right? And, I would feel very sorry for the shippers, the freight forwarders, the logistics, the ocean carriers to be excluded on a traditional marine policy because of a delay. And that's usually what happens because this is a straight exclusion from the traditional language. And here in this case, we can help out because, this is outside of your control. You suffered, 6 days, 8 days, 10 days of delays. Then therefore you entitle for a payment, right? So that was very recent. In between, in the spring, I was actually traveling in Singapore being the second largest commercial ports globally. So we were working with clients, channel partners and whatnot. And it turned out that Biden at that point decided to change the trade tariff. And the trade tariff changes triggered an urgent shipments trend in the area that created a congestion from 0 days to 4 days at the Singapore port, which is very notorious to be extremely automated and modern. And that was the first time in decades that they suffered such a hike in volumes, and they were completely overwhelmed. So that was like, in front of my very eyes, I was talking to an underwriter in the CBD, the business district in Singapore. We were looking at over the window and looking at the congestion building up in front of our very eyes by the minute. So that was one of the examples, right? So there's no shortage of stories, unfortunately.
Insurance loves its exclusions. You've given a couple of examples there where you've got an accumulation of risk through something that is external, maybe even not even foreseen. So with your parametric offering, it sounds like you would be covering things like that. Or kind of related question, how do you manage that accumulation risk if an event happens? And particularly as you grow and you've got lots of clients or your capacity providers have got a lot of exposure to accumulation.
It's a great question. Thanks a lot for asking. I'm a risk manager by trade. Spent 20 years in financial services, essentially focusing on a lot of portfolio risk management, accumulation risk, concentration, and kind of global events that can be deteriorating the performance of the portfolios. The long story short is I kind of brought my experience of capital markets and financial derivatives into the insurance space. And parametric insurance, as you know, are very binary by nature. So they do act as an option product or a swap product. I'm not going to get into too much details about the technicality of what they are, but when the trigger happens, then there's a payout. And therefore, they're very predictable in terms of risk, and they're also very well suited to be aggregated and managed on a top-down and bottom-up basis. So I did create with my data scientist and quant team a full framework to manage risk, reduce product accumulation, reduce concentration, improve diversification by creating a spider web of internal limits. Right, so we do monetize, shipments or per conveyance limit, right, up to $250,000. We do have annualized aggregate limits of $50 million per customers, but in between we have a myriad of internal limits that we manage. So we do manage per ports, per regions, seasonality-based limits. We also have time-based limits. We cannot accumulate more per days or per week or per month. We also have carriers-driven limits. either ocean carriers, also cargo airlines that can be culprits for better or bad behavior. So we found that some of the Asian counterparts are more prone to delays. Some specific names are also notorious to be pretty loose about their operations. So we do underwrite a number of risk factors, and we do control and manage risk based on those sublimits internally. One of the key things that was brought into our conversation with our underwriters at Lloyd's was a few things, right? They wanted us to implement, which we did, specific concentration risk limits per what we call choke points. So choke points are the critical area where there's high volume in very tiny regions where they have to flow through. So Suez Canal is the notorious one, Panama Canal, which was essentially going through a big drought last year and created 30 or 40% more delay than usual. The Malacca Straits in Southeast Asia is around Malaysia, Bering's, Good Hope. There's dozens of them that we actually have specific monitoring in order to limit the concentration, but also trying to actually manage the risk more dynamically. And a few of the things we also implemented is essentially connecting the dots with excellence in monitoring global risks that are existing. So we're working with the Joint War and Cargo Committee, for instance. They have a monthly publication in terms of risk upgrade and downgrade of certain sovereigns, certain regions of the world based on geopolitics and what have you. So all this is actually part of our risk framework, and we watch very closely potential issues and essentially escalation of risk, right? So in order to mitigate and anticipate.
I'm guessing you're not one of those MGAs that sends a monthly spreadsheet to your capacity providers back in London. I suspect you've got a slightly more dynamic way of updating them on what you've written, given your technical background and risk management approach.
Yeah, so we're working with some of the cutting edge bordereau API. So I'm very glad to be working with DISTRIB, for instance. I'm sure you know DISTRIB and Dave quite well. So they've been our partner for streamlining a lot of the the communication process with our underwriters. We built a number of dashboards as well. So it's not just a spreadsheet with a few numbers. We're trying to make it very interactive and offer visualization of risk, which are very dynamic, and trying to get a lot more transparency in real time.
And whilst on the topic of your insurance capacity, last year Greenlight Re is one of your investors, also providing some backing, but Apollo, RLI, ICW were all supporting you. Is that still the case, or is there anything to update on your insurance providers?
Yeah, so we're working with our initial panel that we essentially established with our binder at Lloyd's in 2023. So still great partners, open conversation every month. Risk management and global risk is top of the mind for everyone. So discussing, election year, the situation in Ukraine, Middle East, and Taiwan, which is a little bubble to explode, a time bomb kind of. That's still happening. We did create new relationships globally. Very glad that we created new partnership, new programs with underwriters in Bermuda as well, which help us getting access to different markets. We went to markets outside of the U.S. with a variety of programs, such as South America. It's very big areas where we find a lot of interest. Naturally, the net perishable exporter, so produce, vegetables, flowers, seafood, out of Peru, Chile, Mexico. So that's been exciting. We also made some breakthrough in Asia Pacific. So we have programs in Hong Kong and Singapore right now, and trying to expand into Malaysia and Indonesia. So that's the nature of the business, right? It's very international. So having different partnership with different regional actors is necessary in our case.
You mentioned some of the products there you're offering. You started off in air cargo, which anything that's going to be a perishable, or certainly seafood and things, I presume, is air cargo. So it sounds like air cargo continues to grow, and then you're also now moving into maritime, I guess more recently than March, given that you didn't have so much exposure to Baltimore. How is the air cargo continuing to grow, and what's happening in maritime?
It's very much a multimodal transportation industry. So the air cargo, which was the first product that we launched in 2023, find reasonable success with the niche markets. So the niche market that we found the most traction with is what we call time critical freight. So the time critical area is, as you said, a lot of cold chain assets. So it can be perishable, it can be like fruits, vegetable, produce, and whatnot, but it's also the life science sector. So pharmaceuticals, medical specimen, vaccines, lab testing, sometimes organs. It's a very fascinating industry. They do pay attention to a lot of those quantitative and data-driven insurance products such as ours, because they are systematically temperature controlled and time-sensitive cargo that they have to handle, and therefore real-time tracking and data monitoring is actually front and center. So that's like the cold chain sectors that we're servicing, but not only. In time critical, it turned out that the non-damage business interruption risk is actually almost the bigger risk that we're addressing, help mitigate. And that goes along automotive business. So there's critical parts that are essentially shipped, and this is quite astonishingly a $400 billion market. Automotive parts, it's crazy, it's super big. And the one thing that we found out is every hour of delay of a critical part going to the assembly line can cost as much as $250,000 of penalties. So it is non-damage related, right? It's not because the part broke along the shipments. It's because it didn't make it on time, and therefore your production is stopped. So it's called line stoppage or line down. Proudly, we're the only one in the world offering this non-damage business interruption parametric solution, which is very well geared towards specific risks that people have been like scratching their head around and couldn't find a solution how to like resolve. So same goes for aviation, aerospace, a lot of specialized industry, which are essentially suffering a lot of potential losses, financial losses due to a delay, loss of business, loss of income, penalties, contractual obligations, consequential damages, and so forth. So that's like the time critical space. When we were going to market last year, talking to freight forwarders, logistics, I want to say 98%. So systematically, our counterparts and clients were asking about a maritime product, because 90 to 95% of their volumes is actually going by ocean. The time critical air is interesting. It could be a lot of tactical shipments that we have to protect with you guys. But maritime is our bread and butter. It's like the very big volumes that we handle. Every single freight shipment by maritime is actually affected by delays, and financial losses is always arising from it. So because we heard the customers and we wanted to actually bring a more global solution, then we created a new partnership on the logistics visibility platform, right? So we have a number of partners on the aviation, and we created a new partnership for maritime visibility. And with that, we essentially acquire proprietary data. We create new models. We have quite a bit of fun with our data science team of trying to forecast, predict, reverse calibrate, train the model in order to give the most affordable pricing for the customers, but still preserving loss ratio and performing KPI returns for our underwriters behind. And so with that, we created something very similar in nature, but pretty different at the same time. And we launched our maritime freight product in the spring this year. So very excited about that one, opening up an ocean of possibility, no pun intended.
Sounds really intriguing, that forecasting tool. Is that something you only use internally, or did I hear you say you're offering that to clients now so they can actually get some of your expertise for their own purposes?
Yeah, so right now it's more of an internal risk management tool. Data is everything these days. Sooner or later, we're going to have a direct request from customers to share a lot of those insights. To that effect, I just share a few stories, but one of them was the air cargo index, right? Air cargo delay index that we launched in 2022. And that was more of an analytics solution. We launched on the NASDAQ and Bloomberg, and it was very interesting to see a broader audience was very curious about it. Even hedge funds, asset managers, commodities traders were paying attention. But, air cargo was probably 5% or 10% of what we were looking at. And with all we did the past 6 to 9 months on the ocean side, we now working on launching a maritime delay index as well. And that's essentially at the convergence of a risk management tool, prediction, forecast, and also the whole industry like paying attention to something very critical, and then something we can monetize eventually, right? So index derivative or index, almost like an ETF market that we want to create eventually.
Yeah, that sense of creating an index, it creates validity. People can track it. And you said they can try before you buy, because you're going to trade on that. You need to license those indices. Otherwise, you can just decide to turn them off at any time. One thing you said last time, just to quote it back to you, you said if we do parametric, great, but our clients just want to get their money back or get their money from insurance. What's your perception about both the brokers who are selling the products for you and then the end client? I know you're also talking to them about parametric insurance. Is there starting to be a greater acceptance of parametric, greater understanding and sort of tolerance for parametric products in the last 12 months?
Fascinating topic. Actually, I can tell you that much. And then I'm not going to name names, but I was on a call with a broker, US-based broker yesterday. If they listen to the podcast, they're probably going to recognize themselves. But the feedback from one of the two guys on the call, great guy, very smart, he said at the end of the call, he said, "Thanks for your persistence. I did not get the parametric concept that well. This time around, I get it and I see the value." And so it took us some time to actually build up the right narrative. And maybe there's also like a mindset that's changing over time. Added value does create something different, right, to the customers. And eventually, obviously, brokers are benefiting because they can differentiate themselves and upsell, so to speak. But at the same time, what we've done, I think the best 12 to 18 months is also keeping pretty sober stance in terms of what our product is supposed to do in the market, right? And while, you guys are in Instack are parametric specialists, you dedicate a lot of the research and a lot of conversation around parametric. Sometimes it's a little too specialized, a little too niche. Certainly, like outside of the insurance sector, people are not going to know what that is. To paraphrase what you just said, the only thing they care about is whether the claim is going to get paid or not, right? So along those lines, we have different sets of marketing collaterals, right? And when it comes to, let's say, client-facing collateral, parametric is maybe a mention or two in a small paragraph, but transit time delay, right? So that would be like the way to explain it, and they understand that. They don't need to know necessarily that parametric is the word that we're using. We also developing variation of the product that allow for almost like something in between a parametric trigger with immediate payments and a more of a monthly adjudicated, payment, a monthly declaration where tell your customers, okay, the past 30 days, these are all the claims that paid out. And then, you send like a monthly payment instead. So that's the flexibility around, the modus operandi of how the product should be working is actually a necessity on our end to be essentially listening to the market. Because if the only thing we do is parametric and sticking to the point about real time, speed, and so forth all the time without like hearing what the customer has to say, I think it's not actually doing a good job on our end. So we have to be open-minded about the risk solution in the broader scheme where parametric sits, somewhere. But, if other solution has to arise from it, I think we want to be open to it.
Yeah, and you've touched on this a bit. 2 years in, generative AI, people are finding some real use cases for it. We've also got more traditional artificial intelligence in its own right, which tends to be more numerically orientated. Great to hear an example or two of how you're using, either of those, both of those, in terms of building the business and the analytics.
It is a breakthrough. This is once in a lifetime, at least a few decades. So the two things that we are essentially focusing on, and most of our attention on when it comes to like developing new tools and new value adds to the customers using this emerging technologies are the following. So the number one is continuing developing value into our machine learning training algorithm. The supply chain risks as a general scheme is absolutely fascinating, is very deep. There's trillions of data that we can actually sift through and essentially like learn from. And what we're doing here is essentially a couple of things. We always trying to actually provide the most affordable pricing to the customers, essentially underwriting all the risk factors and the features that actually give them ability to actually get access to affordable pricing. The second one is a lot of the performance KPIs ratio, right? So the loss ratio, keeping it as low as possible by either creating more effective returns, but also like diversifying the portfolio as a whole, right? So that's like part of our optimization tool that we developed using machine learning. And finally, like the forecasting of our index strategy. I think a lot of it is also being able to go to the customer, have them using our visibility tool, and also maybe some decision making that can be improved, right? A lot of it in the freight business is cost driven. That's a given. We not pretending that we replacing any type of freight booking platform, but in the event that they're actually moving, let's say, life science assets, so pharmaceutical. And the reefers, refrigerated containers are extremely expensive to run. And while they might actually want to optimize for cost, they might actually want to optimize for trade lanes, right? Maybe a faster route or a less disrupted route might be actually a better strategy for them. So if we able to actually compute, calibrate, and actually spit out, some sort of item or parameter for the customer to say that trade lane is actually very prone to disruptions, and that one is actually technically maybe longer, but they actually might arrive faster because maybe there's less delay risk. Then that would be a big win for us. I'll give you a quick rundown about how we use GenAI. So GenAI and LLM, OpenAI, and those tools are obviously very, very impressive. What we wanted to go for is something very practical. And what we're developing right now is AI agent for freight scheduling, right? The best way to think about it is essentially a glorified travel agent. They are essentially minions, which are programmatic, and they work on your behalf to optimize for freight scheduling and to sift the data into the internet to get the better version of the scheduling at any point of time, right? So this is something that maybe an army of 25 people could do it manually, and we essentially coded it so that it can be done in milliseconds instead. So a lot of cost efficiency and also speed and accuracy. So that would be like the second item. And customers, a lot of it are in the mid-market. So we service, for the most part, a lot of the LLPs, right? Logistics service providers, freight forwarders, and 3PLs, where their main concern is to move assets and goods from A to B and try to provide the best service possible to their customers. Having the right insurance product attached to their service is paramount. Those customers, those freight forwarders, have been selling cargo insurance and variation around it called shippers insurance for decades, right? And having now ability to get access to a delay insurance that's one click, that can get certificate of insurance in 45 seconds, all online and digitally, it's a pretty big leap for them, right? So a lot of interest from mid-market freight forwarders. Myself, traveling constantly around the globe, I met a lot of exporters as well in South America, cherries exporters, salmon exporters, which are essentially incredibly excited to actually co-design insurance program with MGAs such as us, where they find interesting that we have the flexibility and we're very nimble in terms of creating and making almost like a bespoke or custom-made insurance program to their needs. So we're coming with a delay insurance, obviously, but there's also some work being done for temperature volatility-based insurance. So there's other players that we starting to partner with that are providing those insurance products. So no doubt that the creativity talking to the end customer directly has been fascinating. On the channel distribution side, so we've been working with a lot of tier 2 brokers, closing a lot of agreements and partnership. And then more recently, we're getting interest from the tier 1, considering the current state of marine cargo, the maritime, the air freight market. They keep getting inquiries from their customers to know how they can mitigate those supply chain delay and disruption risks. And it seems like, now we have the time that the market is mature, so we can get access to a larger pool of clients and getting integrated through APIs and whatnot.
Oh, yeah, it's just so interesting hearing somebody who's been out of the industry, come into it, this stuff is all pretty complicated. We tend to think insurance is pretty complicated. You're doing so much and actually servicing the customers, and you're driving it forward. It's just fantastic to hear it. I'm sure what you're doing is quite expensive though, and I'm guessing funding is around the corner somewhere. Is there anything you wanted just to talk about on what your funding plans are?
Yeah, absolutely. Something around $4 million. We backed and supported by mostly US-based VCs, angel groups, micro VCs, but also some European ones. And, with the recent expansion into maritime product and the new features and risk solutions that we've been developing, we've been getting a lot of ambition in the global scale. We recently opened an office in Hong Kong about 9 months ago. So we now have a full-blown APAC, Asia Pacific strategy. We have employees there. And, what we're trying to do is essentially creating a lot of those speed, acceleration, and growth, both in Asia Pacific, South America, by getting interest from the international investor community to help us accelerate our go-to-market. So we're currently closing a round. So anyone interested in kind of learning more and how we can partner on the capital management side and try to get to the next stage. It's such a fascinating time, like looking at the disruptions that everybody's suffering, geopolitics and otherwise has been like creating so much turmoil internationally. Then having new innovative risk solutions arising, getting those solutions in the hand of customers requires, quite a bit of marketing, go-to-markets, operational automations and whatnot. So that's why we need help from international venture capital to accelerate this growth.
And so specifically, is there a fundraising coming out that people should contact you about? I think, where do you want that to go?
You can reach out to me. So Yann at Otonomi.ai. So OTONOMI.ai. And glad to engage, in person on Zoom and, get the conversation going.
Excellent. Well, and also put a link in the episode notes. Well, Yann, that's been really, really interesting. You have been in London, seen us in London. We are going to be back in New York a few times coming up in 2025. So hopefully we'll get a chance to see you in person, maybe get you on stage in New York and keep the conversation going. But again, thank you for your support for Instech. It's really helpful. It's great to be associated with an organization like yourself. And I look forward to seeing you face to face. And I'm sure there'll be more to talk about in another 12 months' time.
Sounds good. Thanks a lot for having me. Always a pleasure.
Well, if you made it this far, then I'm sure you found this as fascinating as I did. But please do tell us what you think about this and any other podcasts you're listening to. You can track Matthew Grant down on LinkedIn or Robin Mertens, or you can email any of us, hello@instech.co. Don't forget also, find out what we're up to at www.instech.co. That's it. We are done.